Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, May 20th, 2025. So we finally saw some selling today, but I really traded this thing pretty awful. It was, we came down, and actually in the room, I said, I want to take, using the spiders, I said, anything over 594, take a short position. And I did it, and then we just really were just playing ping pong along this little thing, and we hit here, and I thought we were going back up again, and I was really eating away at time, and I ended up doing a straddle trade just because I said if we're going to head up, what I'm going to do is I'll just sell the calls and then let the puts go on it. But we made the move and then came straight down. So it wasn't an end of the world day, but it did exactly what I thought it was going to do. I just traded it horribly. We had a $350 loss, so nothing crazy. But anyway, so it's one of these things. I keep saying that we just have to be really careful. And in the report today, I showed you the put call ratio where it's at lower levels than when the S&P was at all-time highs. So everybody in the VIX, this is a good example of what I mean, is that you have the S&P that closed down 31 points, but yet you have volatility or protection that closed down even more than that as far as on a percentage basis. So everyone's out there just running with absolutely zero protection right now, and it's the same as it was when we were up here. And I didn't know what the catalyst was going to be to drive us down. Wasn't really anticipating it was going to be this big of a drop, but everything was in line for it. All of the indicators that we were looking at, that I look at for sentiment, we had the VIX that was really, really pressed down lows, and we had the put call ratio that was at kind of getting close to historic lows. So it just means that everyone's out there just buying calls and just buying every single dip in this market, and really they're not having any type of fear that we're going to drop again. And that's typically when they do it. When are they going to do it? I'm not sure. I know we have an important date tomorrow, but that could really, it doesn't mean it has to, it's not a turn date, meaning that things are going to, switch to the downside. I have a feeling that may be coming into the next week when we get back from the long weekend. But in any case, we could get a big drop, but it's a date that's popping out that we want to keep an eye on. But in any case, we had the S&P that was all the way up here. Everybody was looking up, and then they panicked down here. And this is exactly when we saw the VIX. I think it was all the way up at in the 70s or something. And you had the put call ratio that was at extreme bearish levels, and this is what really got me long the market. And from there, I gave the quantum stocks, which one of them because I've been really recommending to lighten things up, but QBTS, that one is starting to sting a little bit because it's really starting to come out with some good stuff, and you can see it was up 25% today. So I actually started lightening up on it here. I still have a small position, but I'm really not happy that this was the move that it made. But in any case, the thing is that really there's nobody that's looking down on this market, and there's I don't know what the catalyst is going to be, but we're at just levels as far as with sentiment, with just regular technicals and everything else that's throwing up red flags. And to me, you just want to be patient. Even if, like I said, let's say we go up to 6150. Like I said, we got long here. This is where I started saying, we hit the targets. Let's start lightening up. So if I miss, this part, I'm not really that upset. Do I believe that we're screaming to new highs on this one? I don't believe so. But if we do, we're still going to get a pullback. It's just that's just the way this market works. I've been doing it for a long time. Just let everybody get as bullish as they can, and then when they pull it out, I'm looking for this is taken from when really the rally just went straight up. And so to me, you can see right here, 56.62 is the moving average. That will probably get a bounce. What would be more, say, reasonable would be a move coming somewhere down into the 55.36, or like even just coming and closing this gap down at 5,300. That's the, the pullback that would be actually pretty good. And the way it would be this would be our wave one. We'd have it two, and then the three is when I believe that we take out these highs. But right now, just the bearish divergences that I've been showing on the 60-minute chart, the only thing it produced was just a time thing. You can see we haven't really budged from up here. So having what did we have? Not even a 50 or 60 point drop, and it was bid right back up and closed green. So nothing is really played out on this, and you can see each one that has just been a very quick drop and then back up again. But this is where I'm looking at it and I'm seeing greed that is just all over this market, because they're really just using, let's just say, the short term. This one, okay, so right here, they've been, I'm going to do this, the 15-minute, because every time we come down and either touch one of the moving averages on a really short term, they've been bidding it right back up again. So you have everybody that's the FOMO, the fear of missing out, because they missed out on this entire rally from here and were probably shorting it. And then from here, this is where they got bullish on the market. So, like I said, I'm going to be patient on this. We did very, very well. And if history is going to be our guide, I do believe we're going to get that pullback. And, the first, say, support is at this 57, right around that 5,700 level. So this should come, but really the first, if it gets there, that's going to close the gap here too. But like I said, with this type of move, and we've had 1, 2, 3, 4, not even five red days that none of them were over 50 points or 40 points. It's just the greed in the market, and when greed comes around, Warren Buffett used to say, when everybody's fearful is when you want to be buying, when everybody's greedy, you want to be selling. So I'm following those rules, and like I said, if it heads higher and goes up to these levels, so be it. We caught the majority of this move, and I'd rather tuck some money away and wait for the expected pullback, and when it comes, look to buy. But there's a lot of things that could happen, even though, like I said, overall, I'm still bullish on things, but there's a lot of things. If they don't pass this tax bill, which I believe they're going to, it'd just be political suicide for any Republican that's out there that's holding out on it. He would not be elected next, in the midterms, and that would be it. So I do believe they're going to pass it. I just don't know what's going to come through. But we still have things with China that could pop out. So everybody's just discounting any kind of possible reason for us to drop right now, and that's typically when we do it. So again, a normal pullback just on this, it most likely would be down to the 56.40 level. I think it would be more constructive for the bulls to keep this going if we chop around and we make a low anywhere near the 5,400, or possibly even coming down and closing the gap at 53. So that would be, this I think would be really healthy for the market, because if they find buyers, now they're letting people back in again. But one of the other reasons why I'd be a little careful is, in what I was saying here, are valuations. Our valuations are right back to where they were. So institutions automatically, if they see valuations up there, they're going to start skimming off the top. They like to buy at the lows and sell at the highs. And, I just see something like that coming right now. Everything's just getting bid back up. But like I said, I'd be very careful right now with it. And again, I'm not recommending to short this market. I'm just saying anticipate a pullback that you can turn around and look to buy. So if they end up going higher tomorrow, again, we have right around that 6,000 level that I'd be keeping an eye on. So you have 59.86, and then right here you have 6,009. So these would be your resistance areas. If we come down, I'm pretty sure that they would find buyers sitting right here at the 56.83. That may take a few days to play out, but if we bounce and then take that out, that's where we start looking for these other gaps to get filled. So you can see they burned off the overbought levels here with very little price action movement. That will change, and we will get a deeper pullback than what we're seeing. So 15-minute chart, Again, this is just taking a shorter time period as far as with the fibs. So you can see right here, just a 23% retracement brings you to 57.65. A 38% retracement would bring us to the 56.40, but that would also close this gap. But we still have a bunch of other ones underneath. So on the upside, really, what I would be saying is we have this open gap that's right at around that 59.60 level. That's also coinciding with the 78% retracement. So if the bulls take that out, then you got to look at the 59.65 and then back up at this 59.70. And again, if it gets above it, just assume that they're going up to the 6,000 level or pretty close to that. So let's see what plays out tomorrow. Have a fantastic night, and I will talk to you guys in the morning.